So this is the Woolen Mortgage team, just in case you guys don't ever see us, because we're always in the office and never out and about. Sandy and Heidi are my licensed loan partners, and they do a lot of the heavy lifting during the pre-qualification process to gather all of the documents, which is tedious, especially when borrowers are weary of going with one specific lender and they're shopping around, and that makes it a little difficult for us to get a really fine-tuned pre-qualification, but they do a great job doing that. And then Capri, she is our operations manager, pipeline manager. She makes sure everything that once it's under contract, she's the hawk in the eye in the sky, looking over everything. And then Christy is our business development. And Christy, actually, her husband's been in the hospital for a little while, which has been scary. So hopefully she'll give us a good report today. Maybe she won't be able to because of the mic problem, but let's go ahead and get started. Angie, do you have any announcements?
Let's get to it here. So for this week, we don't really have anything going on except Pinnacle Peak Luxury Home Tour. If you guys are interested in checking that out up at Greyhawk, we usually have about 4 or 5 luxury homes on tour. And then next week, we've got Cromford Report on Thursday, the 27th, 10 to 11:30 in the morning. But you know what? In between all of that, we've got some pickleball. So if we've got anyone on here that's wanting to take a lesson and just get out there and, just try this fun new craze, and not even just craze, it's a fun sport. So
it is fun.
let Sean, Christy, or myself know, and we will get you hooked up with the pickleball. So
yeah, it's an
Monday,
addicting
guys,
sport.
and thanks for coming on. What were you saying, Sean?
It's an addicting sport.
Yes, we're playing tonight.
Yeah, it's an addicting sport, but for sure. All right, well, let's jump right in. This is my team, the Woolen Mortgage team. Yeah, between the 5 of us, actually between just the 4, myself, Sandy, Heidi, and Capri, we have over 100 years of mortgage processing and closing loans experience. So a lot of experience behind us. And let's jump right in. So this is the markets. We opened up the day on Friday down. So we lost quite a bit on Friday. And then also we started out way down here and we're trying to gain some ground, but I just looked in the live update and we're down again. So this is kind of messing with my brain a little bit, because last week we had the CPI and the PPI came out. Those were the inflation reports and they were good, but we didn't see much of a rally. And it didn't really stick. And then the Feds opened their mouths, and again, the Feds live in the past. They kind of look at the market through a rear view mirror. They see what's happened on data in the past. They don't look at what's happening right now. So one of the Fed chairs decided to open his mouth and basically said that inflation's still a problem. We may raise rates again twice. So that kind of messed up the markets a little bit, and we'll see what they do. But rates are a little worse today than they were on Friday, and Friday they were a little worse than they were on Thursday. So it's going the opposite really of what it should, because inflation is going down. So we just need the Feds to be careful with what they speak, because what they say has a lot of power. Here's the 10-year. As you can see, the 10-year has been rising. And remember, the 10-year kind of mirrors the 30-year fixed. So this was a good time to lock down here, but look, it's just been a race upward on the 10-year, which does no favors for mortgage-backed securities on the long term. So there's a lot for that to move too on the 10-year. It can go all the way up to these levels of resistance here. So we're going to be wary. Hopefully they'll hold there today, because it looks like they're pushing towards that, and we're going to lose a little bit more today. Here's the rates. This will probably change midday, because this is based on the Friday's rates. So it's probably going to be more like 6.625 or 6.75 by the end of the business day today, which it is what it is. But guys, I'm so excited for when rates start behaving themselves, because right now they're just not following the traditional model with lower inflation. The Feds are still doing their thing. So we got a couple more months of pain before the summer months get here, where rates are going to start coming down. So here's what's happening with the economy this week. The New York Empire Manufacturing Index came in today higher than expected. The housing market index is going to be coming out later on this afternoon. Housing starts are going to show tomorrow. Builders are a little slower, gun shy right now, but we'll see how that looks. Building permits, that's going to show the future of what's happening with how many homes are being built. And then we have on Wednesday, have a 20-year bond auction. Those are always moving because the only reason we have money to fund our government right now is selling bonds. And those auctions are what does that. So if nobody wants them, that means bonds are worth less, and rates could get worse if bonds are worth less. Then feds have their beige book release. And then Thursday, jobs Thursday. So initial jobless claims, continuing jobless claims. So it's going to be a little bit of a moving market on Thursday, but nothing huge. But these are all market moving items that I'm going to be watching. So if we have somebody that's locking, that goes into contract and I get that today, I'm just going to be looking at this to see, okay, what's the timing of it and just being careful. So I think first time home buyers, I mean, I don't know about you guys, but I'm seeing a lot more first time home buyers coming to me. And so I decided to do these first time home buyer webinars, but I want to do something a little bit different. I'm doing them every month, and it's not co-hosted, it's just me hosting it. So what I'd like to do, and this is what it is, monthlyhomebuyerwebinar.com. It's the first Friday of every month. But what I'd like to do is open this up. So if any of you want to co-host your own webinar, you can jump on here and you can be with me, and we could do a co-hosted webinar to your sphere of influence, to the people you know, and you can handle everything real estate, and then I will handle everything mortgage, and we can do rent versus buy. We can go over the benefits of real estate, the process, what it takes to get pre-qualified, and how much you can afford. We'll go over all of that to help people get into, because there's a lot of first-time home buyers out there, and a lot of these buyers right now have been waiting, and they've been saving up their money. You'd be surprised at how many buyers come to me saying they've been living with their parents for the last couple of years since COVID, and they don't have a rent payment, and they've been saving up for a down payment of a house. So we need to capture those. We need to do everything we can to get that business. So marketing home buyer webinars, this is near and dear to my heart. I love marketing, but it takes a lot of efforts, and there's a lot of different ways of doing it. So one of the first things, obviously, social media. So if you're not in social media, and if you need to really get back into social media, or if you're afraid of social media, you can't be. You have to just jump in. TikTok, Instagram are the ones that a lot of younger kids are using. Facebook still works, and a lot of people just get on Facebook. Even my kids are now on Facebook. They just don't like it because they think it's for old people, but it's not, although more young people like TikTok and Instagram. But jump on social media and get that. Email marketing still works, guys. So if you don't have a database of past customers, email works. You can't do it too often, otherwise it's just too much and people will mark it as spam. So you have to be careful with that. But some of the things we're doing is we're doing paid ads. You can do that for social media just to get it out more. Social media on Facebook has some weird rules with real estate and paid ads. So there's some organic things that we can do that. That's the paid advertising. And collaborations and partnerships within the industry. So we have insurance agents that we work with daily. We have title companies like Angie. We've got inspector companies. I mean, we've got a lot of people around us. I think insurance is a really great person to partner up with outside of the normal ones. And here's why. They have a database of a lot of people that are already homeowners. And a lot of these homeowners have kids. So if we can reach out and maybe market with our insurance agents that we're having these homebuyer webinars, that may be a great way to capture more business through our affiliate partners. And insurance agents, they want more business too. So it's a great way to partner with them and do that. Blog posts or press releases. So believe it or not, press releases work. You could do grand openings. You can have some sort of press release that's in the newspaper. You can do it in magazines. You can do it in social media. You can do it on the news, on their websites, announcing that there's a new home buyer program that's coming out. They work. And a lot of companies do it when they just start or like do grand openings. But blog post, if you guys have ever done a blog post, it's very similar to a webinar, but it's more of like a radio type show format, but they work as well. Personal network, we all know people, right? So you have to get your personal network in. Local businesses, I want to really focus on this, guys. So here's what I want to really think about. What are all of the places we go to that are attracted to people that are looking to buy? All right. What are things we know about? So if you're getting married, you're looking to buy. So wedding planners, right? You've got marriage counselors, anyone out there that's tied to creating a new household, right? Even builders, if they don't work with the builder and they go somewhere else, they have their person's contact information. Sometimes if they're old, they'll share that with you. But there's a lot of things. Wedding planners, I think, are one of the best ones, guys, because they talk to people all the time that are getting married, creating a household. And if you could interview maybe 5 to 10 wedding planners over the year and just let them know that you have this homebuyer webinar that you'll do, or if you have any of these programs to help them kind of navigate those waters, we need to create more pillars. So a pillar is basically something that keeps your business afloat, right? Almost like keeping a roof on top of your head. The pillars keep it lifted up. So the business is your roof. We need to create these different pillars to help us get consistent business. And a lot of people getting married, a lot of people have kids, and a lot of people have CPAs and financial planners. Those are another great way to get people and get referrals. And marketing homebuyer webinars to all of these people is great. Another thing that I really want you guys to focus on is open houses. Open houses, we always think of them right now, like they're in my house right now, get their information, let's sign them up, let's get after them, let's get them pre-qualified, but they may not be right now. Another way of capturing their information is, I'm not going to call you right now, but would you like to sign up for one of these one of these home buyer webinars we do every month to learn more about the buying in this industry, buying at this point in time. So registering people for these home buyer webinars during your open houses may be a great soft way of giving them something of value other than just trying to capture their data. So let's talk about rent versus buy. Now, these reports that I can get for you anytime, and they're shareable. You can put them on Facebook. You can put them on all of your social media. You can email them out. You can share them with customers. You can have them in your buyer presentation reports. These are powerful. So these are what I really, really enjoy because, like, in fact, this one right here, this is the same subdivision, the same type of a home, what the rents are versus what it costs to buy the actual house. So in this case, buying the home is about $500 more than renting. So you think, well, it's cheaper to rent, right? Well, the first couple years maybe, but rents always go up. And as you make payments, you're paying yourself. So they don't really take into account that. That's the amortization game. That's you paying yourself. And then appreciation game. So this is over 10 years. Guys, there's a massive difference. The estimated value and what you can make over a 10-year period compared to renting. Once you show somebody that's like getting married, that wants to create stability, that wants to have some sort of a legacy to start, right? When they see this, it's a no-brainer. And here's the actual net gain. And this takes into account selling your home, right? If you sell it the first year, you're going to be out, right? You're going to be missing out on commissions. But after the second year, it's all positive. And with appreciation and amortized gains, this right here, this is net worth. This is a big chunk of income and that renters are missing out on. They don't look at it as income, but this is net worth. This is building a legacy. So if you guys need these in your buyer presentations, please do not hesitate to ask me for these because I can get them for any scenarios. We could put pictures together with them to make it look real, like tangible, like this is the house that cost $3,500 to rent. This is a house that costs $580,000 and they're in the same neighborhood. They look the same, and this is what it looks like over time. Now, I want to talk to you about something that you're missing out on. All of us right now know that there's some houses on the market that need a little TLC. The good homes, they go fast. So if you have a listing and you have a property that just needs some TLC, I guess the best thing you could say to it, right? Little elbow grease. You need to get in there. Maybe it needs to be completely updated. Maybe there's issues with the roof. Whatever it may be, you can sell this house with the intention of having the buyer get a brand new home out of it, utilizing an FHA 203K or a conventional rehabilitation loan. If you haven't done these before, I'm telling you, this is going to be very important in these homes that are older. And if you have a listing and you're going to a listing, this is going to be a great strategy in your listing presentation to help them sell their home with a different angle. So the way it works is this. I mean, here's a little breakdown of it, but before I get into this, the way it works is this. You have a listing. Let's just say the listing's for $600,000, but you know it needs about $100,000 worth of work. And after that work, you know it's going to be worth quite a bit more. It'll be much more appealing. So what we do, we go into contract based on the sales price, and we get a contractor to go out to the property to give us a list of everything they're going to do to beautify the home, whether it's new flooring, a new roof, whether they're knocking down a wall to open up the kitchen to get all new appliances, and that's going to cost $150,000. We work that into the total value of that home and work that into like a mini construction loan for that loan. So they may go in and buy it at 600, but that thing may be worth 650, 700, 750 by the time they're done. And we base the loan off the finished product. So it takes a little bit longer to close of escrow. And, but you can market it this way. If you have a contractor, you can go in and say, with $100,000 into this home, you can do a conventional rehab loan and purchase this home at 600 and then have 100,000 and have a beautiful home. And here's what the plans may look like. You could do something like that. So I think not a lot of people have the eye for this to look at a home and see its potential. But a lot of these home buyers that are getting beat out, they may have the time to be, and the sellers may have the time to work with them to do this type of a project. So FHA 203K and conventional loans, here's the breakdown. There's the renovation loan, and I can send this to you. It's occupancy is primary, second home, and investment properties can do it. On FHA, it's primary only. And basically, we roll the costs into the loan. And it's a great way of doing it. There's a limited FHA, which is very fast. And then there's a standard, which takes a little bit longer. But if you have any properties that need help, or if you're taking a listing that you're like, oh my gosh, this is going to be a challenge, we need to talk to the sellers about this. I'll get all of you more information on this, but this is a real great tool for those ugly homes that are out there. And for those people that don't have the money to spend $100,000 out of their pocket to do a rehab loan, this is for them. They can get the home that they want, maybe at the higher price, but they can buy the cheaper home and finance all of the upgrades. Because I've talked to a lot of people that are buying now and they're going to renovate later. And I talked to them about this. I'm like, oh, I didn't even know that was a possibility. So keep this in mind, guys. It's a great tool, especially for the young borrowers that, oh my gosh, my face is really weird. Sorry about that. The young borrowers that don't have the ability to have money out of pocket. And here's my information, guys. If you want to do a first-time homebuyer program, and if you want to really get into those, if you want to do your own, or maybe you just want to open it as a homebuyer program to anyone, then let's do it. And let's jump in and do it together. So all we need is a little syllabus, a little background on what you want to talk about, and we can do a homebuyer webinar of your own. We can create your own domain name, and we can have it so that it's I don't know, Carla England homebuyerwebinar.com. We could do that, right, Carla? I saw you walking away. So whatever you guys want to do, guys, I can do that and help you with that, because I think there's a huge need out there for information, and the internet does a poor job. So so let's really dive into that. And if you have any questions on it, let me know. Let's work on it together. We can advertise it together. We can hit apartment complexes. We can spam them with flyers. I mean, there's a lot of different things we can do to get them out there. But let me know if you guys need anything, if you have any questions. Do you guys have any questions on on these webinars that you can that we can co-host?
I want to do it. I don't have
right.
a question, but I want to sit down with you and kind of strategize that,
For sure. And it's a great way, even if you do it quarterly and your customers know that it's always available, and then you record them, and then you can advertise that recorded version. It's
Yeah, 'cause I was
fantastic.
thinking YouTube,
Yep.
I've seen it on my YouTube business.
So if you go to my YouTube, I urge you all to go into my YouTube. Just Google Sean Woolen YouTube. I have a ton of videos on my YouTube. I have how to shop for a loan, how do rates work, different videos on different loan programs. I've got all of my home buyer videos that I do. I do all my updates that are on there. Just scroll through that. And if you see anything that might interest one of your buyers that may be on the fence, shoot it over to them. Or create one of your own, create your own YouTube channel. It's a great way of getting out there. And people like to see you because they like you. People like dealing with people they like and people they love. So put yourself in front of them. It doesn't matter what you look like to yourself. I didn't do video for, let's see, I started doing video in 2019. I was an actor as a kid. Like, I should be in front of the video my whole life, but I was too chicken. Like, I didn't like the way I looked on video. So you're only your own worst critic, right? So just get on there. People know what you look like. People love what you look like. They love you. Get out there, get your face out there, and get in front of your people. It's a great way of doing it. And doing it together maybe takes that nervousness away, because I can be your little crutch you can lean on as we go through that. But let's do it. And let's get in front of all of our friends that are looking to buy. Some of us are younger and have a lot of friends that are still renting. Other of us we're older and their kids are now buying. I mean, my kid's 21 and he'll probably be buying pretty soon. So we need to get in front of everyone, guys. And this is a great way of doing it without being pushy. It's just information. It's really good information. And it's really great for everybody. So without further ado, it's Monday, and I know we have a busy day ahead of us. So if any of you need anything, I'm always here for you. And let's coordinate some of these webinars in the future. And our next one that I'm going to be doing live is Cinco de Mayo. So it's the 5th of May, and I may or may not wear a mariachi outfit. I probably won't, but that would be fun. But if you guys need anything, again, it's monthlyhomebuyerwebinar.com if you want to send your friends to it. I'm advertising it out there as well. So last time there was a little bit of a technical glitch. I thought that the system would automatically send you guys the registration, and when you registered, and I was wrong. So deep within the settings of the webinar program, there's a box you have to check saying, would you like me to automatically send the registration information? And I was a total failure on that. It was my first time, so I apologize. But this next one should go without a hitch. So enjoy your day, guys. If you have any other questions, I'll stay on for a little bit. And thank you guys for everything.
Sean, can that no money down program work in conjunction with the first time home buyer?
Absolutely.
I mean, if you have good credit.
Yes. So the zero down program, the Powerhouse 100, you need good credit, but it's a conventional loan, zero down, up to $726,200. Literally zero down. So they can ask the sellers to pay closing costs. There is one caveat to it. You need a 720 credit score, and you need 1% of the total out of pocket. So you have to pay for your closing costs. The minimum is you have to have 1% of the total cost out of your own pocket. So you can't have nothing down. So you can do zero down and then pay for your own closing costs. And that would work.
You can't have the seller pay for your closing cost and zero down?
It depends. You can, but you need at least 1%. So let's just say it's a $400,000 house and the closing costs are $8,000 or $9,000 because you're paying some fees to get the lower rate. You can have the sellers pay that and come in with just the 1% would be like the $4,000 or so. So we just need to calculate that properly. So it's not nothing out of pocket, but guys, even on the grant programs, there's still something out of pocket that they need to bring right now. And the grant rates are terrible. And these rates are still very good. So a fantastic program. And again, there's a video about that on my YouTube called the Powerhouse 100 that you could share.
Yes, I need to watch that. I haven't had a chance to watch it yet, but I will today.
Yeah, it's a fantastic little program. So, but
Hey,
yeah, that
Sean,
would definitely work. Yes, Frankie.
What qualifies somebody of being a first-time home buyer? I mean, if somebody has bought a house like 10, 15 years ago, can they still qualify for that?
You're right, Carla. 3 years without owning a home is what resets the calendar for you being a first-time home buyer.
Okay.
So if you haven't owned a home in 3 years, being on title is still owning a home. So we've had customers that have never bought a home themselves, but their parents put them on title to help them, with the future and like part of the legacy, and it messed them up. So they couldn't do the home buyer program. So being on title, even if you don't live in it, is still ownership. So make sure they know that too.
Okay.
Good question. All right, guys. Well, enjoy your week. I will be here all week. I'll be here every day, all weekend, and as well. So if you guys need me, I'm always here. Have a great day, and we'll talk to you guys soon.
Thank you, Sean.
All right, see you guys.